The property tax credit is something we claim on your income tax return. It's a process of listing out each parcel, each county that parcel's in, and how much tax was paid to the schools and to the community college. So there's two separate numbers we have to report. It's really not too hard to claim, other than we have to know what taxes you paid in that calendar year, or in your fiscal year if you're a corporation. The state has a website where you can look up each of your parcels and get those numbers because it's not the amount that you paid to the county, but it's the portion of that was paid to the schools. And it's even not as simple as looking at your stubs that came back from the county and putting the dollar amount that went to the schools, because sometimes there's credits, and so it doesn't often line up with that at all. So you really need to use the lookup tool that the state provides. It can be a little complicated on parcels of ground that are owned by multiple people, and so it's real important that you're only claiming your percentage. So if you use that lookup tool, it'll give you 100% that was paid in, but it'll give you a chance to override how much you have paid of that tax. Every year that this has been in existence, that percentage has gone up. Well, this year the school one went from 30 and stayed at 30, but it has never gone down. And so we did have some conversations there right at the beginning. Everybody felt like they needed to prepay real estate taxes in order to claim this credit, but this isn't going away. And then it's been better to wait and pay it on time when it's due every year. We always tell producers, well, if there's a reason that you're prepaying those real estate taxes for other things, great, but just for the credit, there isn't any reason to prepay. You're probably just as good to hold on and wait until those are due. This is a tax benefit that you're getting to something that you deducted. So there is a tax benefit rule that says that if you get a refund for something you claim to deduct it on, it's taxable income. And so there's been some confusion that that's not taxable income. Even if you don't get a check and it just reduces your tax paid, that's still taxable income for the year that you receive it. And so there's something that you need to be watching that and making sure that your accounting is done correctly to make sure that that's being included in your income. And for some people, that's a lot of money.